Everybody starting early. Surprise! What's going on? How's it going today? It was not the recovery that it was kind of recovery, but not really recovery. We got a long way to go back to 5600 on S&P. I tell you that for sure. Anyway, what's on tap? We got like 80% of the S&P 500 out of earnings blackout window there. And that means stock buybacks can ramp back up. The correction, well, is it done? What do we have? We can look at it, see where we're at. And 30 minutes of your requests, as always. We'll do that. Hang on. Don't make any requests until we get there. Fishing time for Rongamer out there. Hope you catch a big one, my man. Anyway, alrighty. So welcome everybody. I guess I'll wait just a few more seconds, get a few more people on the stream. Looks like we got a whole whopping like 20 people, and cool. So we got Sledge, we got Dan, we got Don, Rosalind, Rex, John. Rosalind, if I didn't tell you, those cakes, they are pretty good. I finally tried them, and I do appreciate you giving me those. Pretty tasty. Unlike anything I've ever had before, that's for sure. Not like anything I've ever had. And John, Don, Jason, Steven, Kevin, Dan, Ivan, welcome everybody. And let's get her at her here. Yeah, it got me on the big screen, huh? Well, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining. It is not a recommendation to be buying or selling anything at all. No financial instruments, no stuff from gurus, no nothing. All right, no stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. There is substantial risk of loss. Hopefully, everybody got that this week. It's been a rough week. People have been burning me down, that's for sure. I feel like I tried to adequately warn everybody, but apparently that wasn't good enough for some people. But hey, some people's kids, right? Some people's kids. Not blaming them. It's they had parents and their parents didn't teach them right, I guess. Anyway, if you desire personal financial advice, you need to hire and consult a financial advisor. That's not what I do. I'm not trying to tell you what to do or even how to do it. I'm just sharing what I'm doing, a little bit of what I'm doing, some of the tools I've made for myself, and trying to show you how I use them so that you can kind of do your own thing, right? So there you go. There you go. And I've been talking about the carry trade for a couple days now. How big was the carry trade? $20 trillion. All right. Now, global markets, roughly $200 to $300 trillion. All right. Global equities. And that includes pretty much everything. Global assets. Roughly $200 to $300 trillion. So the carry trade, roughly almost 10% of that. That's a lot. That's a lot. I commonly say there's only about 10, when everybody runs for the exit, there's only about 10% of the money that can come out before buyers are gone and there's a problem. So that's what we're seeing right now. It's estimated, there's differing opinions between Goldman Sachs and, who was it? Who else was doing? Hold on. Let me look at my notes real quick. JP Morgan and Goldman Sachs and JP Morgan have differing opinions on the degree to which it's already run its course. I think Goldman Sachs holding that it's only 50% unwound so far. So there could be another leg to go. And trillion. Not even a speck of sand on the beach yet. So we're talking $20 trillion in that. So, and 200 to 300 trillion in total global equities, so 10%. And we're kind of seeing that nice haircut right off the top. And can it continue to have problems? Possibly. And it could be nearing unwound. We'll go through some of that here. And in fact, let's just pitter patter. Let's get at her. So, naked. If you wonder, after this morning, people asking me about looking at the Japanese market. Here's the Japanese market futures right here. Put in US dollar terms. And we were doing, that's a 15-minute, obviously. So let's go back to the daily. So there's the problem. There's the crux, right? Started out like, lo and behold, it started out the 10th of July. So wasn't really a big deal. We came down to the roadmap line. Everything looked hunky-dory. Held support until it wasn't. All right. Then that's a problem. That's where the problem started. Now, that was the biggest 2-day down, I guess, in Japanese market history, I guess, right there. It represented, gosh, what was that? Let's see. Let's just put a measure on it right there. That high, that low, although it didn't close at the lows. That was a 16% down. 6,000 points shaved off of there in 2 days. You go for the 3-day. Started right at that candle high, that candle low, 20% down in 3 days. 1, 2, 3, right there. Start on Thursday, continuing on Friday, bottoming on Monday. Today, benign. They had some crazy up moves, crazy down moves. Ended up being basically an inside candle doji, which is indecision. This can get another leg down. So that's my niece saying, hey, I guess Kimberly's still hanging out at my niece and nephew's house. They just live across the way from us, maybe like mile and a half, 2 miles away. We don't see them nearly as often as you would think, but let's see. She's 5 and he's 9 now? Anyway, much younger than my kids. Since my youngest just graduated high school and going on to culinary school next month. So anyway, there you go right there. Support and then broke support. And what happens when we break support? Yikes. That's why I was warned. Like, we've got to hold support and turn back higher. If we don't, we get the yikes. We had support down here. We turned higher. We got an extension. And a little icing on the cake. It's kind of what happens. But when we zoom out, how far could this go down? That's the big question, right? Like, how much unwind could there be? So next levels of support. Just click here, click here. We're at the first one. If this doesn't hold, we're in the zone for a reversal here. Like, that's that move up from all the way back here in March of 22. Oh, that was a while ago. Up here to the high in July of 24. Talking over 2.5 years, roughly. Almost 2.5 years. Retrace. All right. Now, if that low is not the low, what if this low is the low? Oh, this gets scary because now here's the support. All right. Now, what if that's, what if we got to zoom out even further? Look at that. That's the roadmap line on the monthly chart. When's the last time we've been down there? Oh, look, it was right back here during COVID. We could go touch that on the Nikia. I don't even know how you say that. It's not in my East Tennessee vernacular. So you got that low back here, made in 09. Yeah, supposedly the biggest 2-day drop that we exceeded was back here in 08, somewhere back here. That looks like a pretty nasty wipeout right back there in 08, 09. That can happen again. See that monthly candle right there? We can repeat that. Come touch the roadmap line, back down to 23. That's another 10,000 off. Cha-ching. This baby might not be done. Maybe another 32% down. So, there you go. And that's just the Japanese stock market. It's widely speculated that Japan will try to intervene. USD JPY was being shorted at the record rate. And look right there. As I talked about on Monday, we can see this return back down here. So US dollar, Japanese yen. This is the Forex market. We could see this continue. Yeah, we're not done yet. Look, I mean, today was even a red day. Pushing lower. This thing is not done. I'm not talking very loud, probably. I've got it cranked up to the max, but I'm not talking very loud. So, there you go. That's what we got. That's the danger signs in the market, I guess you might say. All right. Now, we have... I was talking about S&P 500 earnings. Like 80% of the companies by market cap have already reported earnings. By now, by the end of the week, it's going to be closer to 90, 95%. And what does that mean? It means that stock buybacks, they're not in blackout anymore. The companies can, generally companies pump aggregate about $50 billion of cash back into the market every single day. When they're in the blackout, that kind of dries it up a little bit. And then when they come back out, they can do that. So here we've got, after the close today, we had Supermicro, Rivian, Airbnb, Wynn, Devon, Reddit, GigaCloud, Axion, Upstart, and AMZN. And tomorrow morning, before we get to the open, Shopify, Walt Disney, Novo Nordisk, CVS, Global Payments, Emerson, Aurora, Lyft, Sony, Dynatrace. Then after the market tomorrow, Robinhood, we get Lilly, SoundHound, and Canopy Growth by the end of the week here. So we're just seeing all sorts of wild stuff. And Supermicro, SMCI. Let's just pop that one up. SMCI. It was seeing a little pop in the post market. Seeing a little bit of pop. Not a lot of bit of pop. A little bit of pop. Yeah, 30, 40 bucks. Still potential downtrend here. Still the potential to go down. We're still below the roadmap line, even with the post. I guess that's a drop now. It was up, now it's down. There you go. Watch out. Still expecting further decline. It was popping, now it's dropping. The way it goes, this way the cookie crumbles. Rivian. Yeah, pretty flat. Airbnb. That one was dropping. That one was on the way down. Oh, look at that. So close to the target zone. Right there, the post market. Sometimes I get lucky, you might say. How do you get it right? It's not. I tell you, once you can decouple from the news and just pay attention to the price action, it becomes so much more clear. Like for years, I wandered around. It felt like I was a blind person that couldn't see what the market was telling me. And then I learned this Fibonacci stuff right here and the roadmap line, and that's based on Elliott wave. Really, I mean, that's the underlying thing that how I know the proportions of everything ties together with Elliott wave. And let's be honest, Elliott wave is complicated. It's nuanced and there's a lot to it, and I've simplified out just a handful of patterns that are repeatable, and I go looking for them in the market. Why do I go looking for those handful of patterns from Elliott wave? Because those are the ones that I found that I can reliably make money. All right. You can sit here and break down every single little twist and turn of this and come up with two potential directions for every ticker. Every ticker, every time frame, even every time frame, every ticker on every time frame, you can sit here and come up with alternates. Now, this is my primary expectation. This is my alternate expectation. You can spend a lifetime breaking down each individual chart. And I tried to do that for like 4 years. I wanted to know where each one was going each time. Like I was like, I want to know where Apple's going every single twist and turn. And it can be maddening, absolute maddening, because up to 80% of the time, a ticker will just consolidate, not be doing jack squat. And, the hardest things to predict are corrections here. But what's not hard to predict is where a correction should terminate. Now, where in the correction you are, that's kind of difficult. Where the correction should end, that gets relatively easier to predict here. And right there on Apple, that was the lower low that I'd kind of waited for gosh, that got near a year. I mean, from July to May, it's like 10 months. And then we made the lower low, and it was like, oh my gosh, when it breaks through the 618 here, right there, it's probably shooting off to the target. And it did. It shot right up to the target. It actually exceeded it a little bit, and now we came back to the roadmap line again. Now, this can go on another run. Very well, very easily can go on another run. It's going to have to break above this consolidation right here. This consolidation right there. To go right up there. Simple as that. So, beautiful stuff in the market. Now, I typically on Tuesdays will hit a few things that I don't normally hit. We usually go through the futures. Now, ES has something interesting that did today. We got to go down to like the 15-minute chart. So look right here. This is, to me, it's very, very interesting. Gave a little twist and turn. So, what did it do? Right, we had a 3-wave up. We got the retrace. We didn't quite hit this level down here that I was looking for this morning. And it did something different. It did something that's becomes much less reliable at this point. So it's a move up, a retrace, a move up again, and a retrace, and a move up again. You may be like, well, that's 5 waves. And you said that 5, for those of you that have been around me for a little while, you're like, the 5 waves are, like, that's impulsive. That's a trend, right? But the big problem with this is the fact that this high was overlapped by this correction right here. If this is actually impulsive and bullish, this correction right here, this number 3, or number 4, excuse me, this one right here, circle it, that one right there should not have overlapped this high. Should have been up here, never overlapped, and then we go higher from there if we're starting a new trend and it's going to be impulsive. So this muddies it up a little bit, a lot of it at this point, and makes it less reliable and less clear. Now, this could still be a 3-wave up. This could be a retrace. This could be the start of the next piece. A, B, C, maybe. I don't like it. Don't like it one bit. Now, the tell will be if we overlap this low tonight. This is the key point here. If we overlap this low tonight, which we're not far away from, then this is not part of the C wave, right? This is pushing back lower, and this is probably a leading diagonal and a highly unreliable indication of anything. It's probably, it could be an A wave up, could be a 1 up. It becomes very muddy and mucky. So that's the key to watch right now tonight. Put an alert there if you want, right at that low. If we break below it tonight, anytime, or even tomorrow before breaking above this high, right up here, set your alert up there. Then it's even more unclear. There's no clear path here. So what we want this to do, hold here, push higher, but we want to get on through here. This is not impulsive, so this is not going to be the fast bust through here. We may spend tomorrow coming back down in here, then make the next move up, kind of come up. Gosh, this gets so incredibly muddy at this point. So this could be the A5 up, but it's overlapping, and we could see this push up into right to the bottom here. Get a deep retrace again that overlaps this high right here. So this builds a 1, 2, 3, 4, 5 up sloppy again. And then we could top out as high as here. And then still end up going down in a blaze of glory. That's the problem here. That's the big problem. You see how these are very similar in size here. And very similar in size to that one. They're all kind of the same size here. And I don't like the way this started. I really don't. The danger keeps escalating here that we may see an 800 to 1500 point crash. Like, this wasn't a crash. This was just a market route. And we could see a crash. It's setting up. And that's what really concerns me. Really concerns me. All right. Cheery weather, right? Great, JT. Love it. All right. This over here. Nothing more clear here. Like, that's all overlapping. All of this might end up in a lower low. So both ES, like, because this wasn't very reliable, and what reliable means is we could easily just decide to make a lower low here overnight and clear this all out again. We can just pop down here. If we break down below here, we could just pop down here, make a lower low, and then start all over again on a potential reversal. That's unfortunately in the chart for both NQ and ES at this juncture, which is S&P 500 and the Nasdaq. Russell, unclear still. Like, that's same exact pattern and nothing clear. So they all did the same kind of reversal pattern. They all may get a lower low. Right there. And NQ, Nasdaq would be right down here. That's unfortunately what we've got. So whatever 800 to 1500 points on S&P 500 would be, that would be a crash. What are we talking? 20% down in a day, or down in a couple days? That's what I'm talking about. Like 20% down. COVID was a crash, basically. Go look at that. Go back over. Pull it down, pull it down. See how this happened in a short period of time? 35%. That was a crash. This, not really a crash. That's just a market route. We've got those sides pull back all over the place. It just felt like a crash because we hadn't done it in a record amount of time, like 350 something trading sessions. We went without having a 2% pullback. We just forget. We're short, traders forget the pain of a pullback. And it feels awful, horrible when we actually get one. Hopefully you weren't caught completely surprised. I warned that we were going to have one sooner or later for a long time. And we got it. So we're talking about 800 to 1,000 points down. 800 right in there, and 1,000 right there, and 1,500 right about there. 1,1600. That's all possible, and that could happen in a short period of a week or 3 right there. A month, maybe 2 months. That's what I'm talking about. That would be a crash. It'd just be down, 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 down. And you'd be like, holy fudge. That's what we're talking about. That potential is setting up on the chart right now. And from that level right up there. All right. Don't mean to be a Debbie Downer time, but this is a very, 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 very scary potential setting up in the chart right now. Very much like what's set up back here during COVID. Back over here. It's kind of set up right in here. We made a higher high before we rolled. But this was what's set up back here. We can still make a higher high and then roll. It could be like this one over here. Pull back, took it to extremes, and then got the crash. I don't know if we crash from here or here or here or here. I don't know which one it is, but we're going to get this. Like one of these is coming. It's in the charts. It's showing up. If we go to new highs, everybody's gonna be like, forget about the potential, and then it's gonna surprise everybody, and it's gonna be pretty horrible. So, all right, we're talking about all the way down here on NQ, all the way down here on ES, back down where we were back here, just on the first move, and we'll probably rally back up again for a couple of years, then we'll flush it on down. It's in the charts. Russell has me very concerned. We could just dump that one because we already made the high. And it was a lower high. We made the high back here. This is a much lower high. And this one's already set up for the crash. That one can dump off a lot. 38% down from where we are now already. That's what we're talking about. All right, oil. Looks like we have set the stage to go tag this target right down here. It looks like all we need to do is just do it at this point. So we're going to take that on down. I don't really see a bullish case at the moment for that one. One nice big flush, lower low than what we had right back here in December. Clean it up, then we can go higher. Brent, look at that. Almost there. Brent and light crude both in agreement. So light crude, WTI, and Brent both in agreement. So gasoline also seems to be in agreement. We may see some lower price action here. We actually tagged the extension there on that move. It's going to take a bigger move to get down to these levels. Not sure we're going to do it. We're holding a measured bounce. Potential. Gasoline could go higher. This would blow people's minds if gasoline goes higher while oil goes down. Absolutely blow people's minds. And it can absolutely happen because it's in the chart right here. This low, this high, this low right here. Oh, missed it slightly. Sets the stage for this to rally right up in this zone right there. So absolutely blow people's minds. Maybe a couple of refineries blow up or something like that. This is, I don't know, like Sledge. I don't know. I don't know the thing. All right. I don't know what the thing is, but something could cause this to explode higher while the price of oil goes down. And funny enough, look at the futures on gasoline. Crazy. Heating oil, diesel fuel. That one looks like it's going to bottom out probably just a little bit lower here at 220. Right there. Natural gas has been holding this 618 and may explode higher, just like gasoline. Could see this rally right up to 420. Need it to break above the roadmap line. This 250 area is kind of your tell. We get above that, we're probably coming right up in this zone. Somewhere between $4.20 and $5 cubic foot for natural gas. On the futures, gold. This is precarious. Holding the uptrend of highs. Probably needing a retrace back down. It's just kind of chugging the channel here at this point. So we may return back to this zone. Bounce back up again. Bounce back down. Bounce back up. See, but it may, there's always the risk it retraces back to the roadmap line. Silver is at the roadmap line. Now look at that. Gold held up really well. Gold up here, silver down here, decoupled from gold. It's interesting. Interesting to me anyway. That retraced to the roadmap line. And when that turns, could be quite the explosive move to the high side here. Definitely hitting the 35 target right up there would be what I expect. Copper, on the other hand, I've been warning, copper may break down. And right there, lower low than what we had back here in July of 22 is what I still expect copper to do. I've had several people tell me I was absolutely crazy. There's no way this is going to happen. Just watch out. Watch out, watch out, watch out. Right there. Lumber is not really chartable. It's just been chopping. Like, it hasn't established itself after they changed the contract. So powers that be didn't like the way lumber was trading, so they changed the contract, and now it trades like a hot mess. So we've got wheat, corn, sugar, pork, cattle, whatever you want to talk about. We can talk about it, and let's go talk about crypto real quick before we circle back to taking requests. Now, when we get to requests in just a moment, I will share the rules before you go. So don't just throw a bunch of requests at me. We'll do that in just a second. This, kind of like the way S&P was doing the 5-wave up, this is doing a 5-wave down. 1, 2, 3, 4, 5. Very overlappy with the retraces overlapping the prior lows. And I don't like it. And it's unreliable at this point. Now, it could be an A, it could be a B, and it could be a C very quickly flushing out here, but that would need one more push down. I can make a case for all sorts of things being complete here, but nothing's clear, and there's no reversal setup. We'll need a retrace back above the roadmap line, a retest of it, and then a break above, making higher highs, not lower highs, which is what we got in place right now. Lower high, lower high, lower high, lower high. So that's unclear yet again. I'm not 100% sure that we are done with the correction. Ethereum, on the other hand, could be done. That could have been the bottom. Did a very nice flush there. And I've said all sorts of things along the way. And let's just clean up a few of these. Make it a little more clear. Did this big head and shoulders back here years ago. Made the reversal. Let's clear all these over here. So here's the low. I always, when I'm teaching LA wave and stuff like that, I'm like, where's the low? That's the low at this point of this cycle. And we've made a move up, and we made a retrace right there. That was the first move up, and the retrace held a measured bounce. Right? That's basically either an A, B, or a 1, 2. So that move up using the three-point tool right there. We bounced at the roadmap line, retraced, found the low. We came up to the 1618. That's what I would consider bullish. Now here's where it starts getting like we need to hold that low that we've got in place right now. Because if we overlap this, and that was the top of 1, and this was only the third wave up right there, either it's a nested 1, 2, 1, 2, or you know, this could be just all of a bigger 1 right here, and this being a retrace. So it either has to be 1, 2, 1, 2, or if this is the 4, it's got to hold above that high right there. So we've got to hold here, and we go up for the 5, and the 5 at this point would be an extension of that. So roughly somewhere between 5,000 and somewhere around 7,000, because the whole correction back here potential to take us up to the 7,000 area. So somewhere between here and here would be the target. If this is a fifth wave set up right here, that'd be the target. Now, if this is a 1-2-1-2, it sets this up for a much more explosive potential higher move. 1-2-1-2, and then that would be wave 3 would be something like potential to go to 14,000 right there, and then we'd retrace and do the 4-5-4-5. So that's 1-2-1-2 3-4 3-4-5 right there. I don't know. It's unclear at the moment. So if this holds here, that's my expectation. If this pushes on down, I'll have to reevaluate where we're getting to. And it could just break down and this be an A way down, a B retrace, and we get the C down and it go down to the 500, 700 area down here. Entirely possible that it's just a big correction and we actually break down and go on down like that. That's why it's unclear, and that's why I'm not really chasing anything on Ethereum right now. All right, so the rules of engagement for requests. 1 ticker per person per request. You got to wait for somebody else to go. If you give me a big long list of tickers, I'm going to skip you or pick one that I want to do and move on. Please write in capitals so I know they're tickers. If you write in lowercase, I get confused sometimes because some tickers look like words and some words look like tickers. And please use the complete ticker that I can type into TradingView. So like if you request a crypto, ETH USD, or like a Forex USD JPY, if you want me to look at it. In the future, if you could put it in TradingView terms so I know that's what you want, that helps me. Like, if you're going to request sugar, SB, 1 exclamation point would be the way. And there we go. All right. And go. And I'll do my best to hit as many as I can. FTNT, see that one first. And we're at the support. Breakdown, well, lower, down to 30s. If we can hold it, break back up with the roadmap line, upside, potential to go up in the 98 area eventually. Yeah, that's what we got. That's what we got. Potential, if we're going to be bullish, I'm going to pull these over. If we're going to be super bullish, that potential up there, 120 is in there. If we break down, the levels to break down through, probably down here below, if we get below 50, 5 more points, 5.5 more points down, probably odds are we're going down to 38, if not on down to 32 right there in FTNT. All right, BHEB. That looks pretty bearish at this point, making lower highs. It's a big downtrend. Is that a bottom? Got me. That's a downtrend. Made the lowest low here, and this all looks corrective with lower highs, so it looks like it needs a flush back down below the low to finish that up. IPOs are typically bearish, and that doesn't look like it's made a bottom yet because that's not a bullish reversal so far. HE, Hawaiian Electric, doing nothing. Popped up here, a little excitement, and parked it. Still hadn't gap filled. That's the resistance. Yeah, it has no retraces. It just popped up and sat. So that can easily come back to the roadmap line, set up a retrace, and then we can talk about where it's going to go. But at this point, I would kind of expect it to retrace back down to the 12, 13 area here, find a bottom back in this consolidation, and then we can talk about possibly moving up to 18, 19, 22, the bottom of the gap down. And it's got a lot of work to do before it big up potential on Hawaiian Electric. Block next up has been looking horrible and probably going down back to the lows. Breaking down, probably gonna go cruising down here. That's what that looks like. Lower highs, lower highs. Wish I had better news, but that does not look like it's going to get bullish. And it can hold right in. It's got to hold this area right here around 53 if it's going to be bullish. But if it doesn't, watch out for that right there, 35 on the downside for SQ. The RDO. Not one I even recognize. That has the potential to be a bounce right there, that high, that low, back above this, 29 area, 35, 37 on the upside there. USD, JPY. So kind of already outlined that this may go down to 120. It's kind of in no man's land here. Hanging in the middle. That potentially completed a 5 up and completed a 5 up off the low from all the way back here in 2020. The retrace of that would take it back to 120. Somewhere in this zone, I would expect it to retrace to. Not sure that's done yet. Could hold here and go again for another extension, but looks like we may do the bigger down here. Looks like it's 1, 2, 3, 4, 5, and that looks like 5 in the middle there. It looks like it's pretty much complete. That can come right down here, and it could get a bigger, deeper retrace. Even than that. All right, that's USD JPY, CPR. Probably going down. Lower low than back here. What I expect. Big corrective move, even though it's a high. Yep, right back down in here. It's kind of where I expect it to go cruising to right there. All right, that's copper for you. MU. This one potentially setting up a bigger pattern here. Potential. Just remove a few things. Oh, yeah. Potential for this one to be bottoming right in this zone. That move up, that retrace. Potential once we break above this kind of level right up in here. For that move right there. On MU, that one's pretty bullish. Pretty bullish. And I just skipped everything all the way down to the bottom. Awesome. Connell is leveraged, and there's no way to really chart leverage stuff. You kind of tag the downside here, but it can extend. You got to go to underlying. Got to chart coin. So 4 things don't really follow my patterns. One of those, leverage stuff, biotechs, anything the FDA, Food and Drug Administration of the United States gets involved in, doesn't really follow patterns. It just can do a wild, you get a wild hair and do whatever it wants. Low price stuff under $10, equities under $10 USD on the US stock market. It doesn't count cryptos, doesn't count Forex, doesn't count futures. That's just equities. And then China stuff. China has a different sense of accounting. And then any combination of those just makes it really crazy, like leveraged biotech or something like that. So leverage stuff doesn't always follow patterns and may experience further outsized moves here. This looks like it could easily go off this low and this high. Looks like it could easily come down here to this zone right there. All that said, all right, AVGO. Potential for this one to turn, break back above 163 and get 194.203. Right there. INTC is at almost to the bottom. Potential right there. I drew a chart, drew a circle right there. That would be first target and next target down at 11 if we break below that. Just scraping the top right there. That's how easy it is. These levels come from all the way back here, long ago. Right back here. So 2008. And that one right there. 2012. 2013. 2014. 2015. 2016. 2017. 2018. 2019. 2020. 2021. 2022. 2023. 2024. 2025. 2026. 2027. 2028. 2029. 2030. 2031. 2032. 2033. 2034. 2035. 2036. 2037. 2038. 2039. 2040. 2041. 2042. 2043. 2044. 2045. 2046. 2047. 2048. 2049. 2050. 2051. 2052. 2053. 2054. 2055. 2056. 2057. 2058. 2059. 2060. 2061. 2062. 2063. 2064. 2065. 2066. 2067. 2068. 2069. 2070. 2071. 2072. 2073. 2074. 2075. 2076. 2077. 2078. 2079. 2080. 2081. 2082. 2083. 2084. 2085. 2086. 2087. 2088. 2089. 2090. 2091. 2092. 2093. 2094. 2095. 2096. 2097. 2098. 2099. 2000. 2001. 2002. 2003. 2004. 2005 What's funny is if somebody was saying if you had bought in 96, I think it was right here, 90, 97, 90, 96, 97, right there, like end of 96, and you just held for the last 30 years, you've made no money on Intel. I was like, oh, dang. Like, that's just a. Gotta be careful on the sideways corrections. Any potential for this one to launch off? Hate to introduce my biases to this, but I have a large upside bias on this. Holding in this area can launch it off pretty big. Target, it did this bounce, and the target's right up here at the minimum. That's the kind of the conservative target. The more aggressive target, even up here, 300-400. So, and that's going to take a while. Could take 10 years. Near term, doesn't really have much possible retrace to the roadmap line, but upside resistance at this zone right up here, that prior high. Now we're making higher highs here. A higher high, higher high. So we're breaking highs. Got to keep breaking them. Got to keep going. Could have a very large upside on NEM, UGA. United States Gasoline Fund. Well, see, that's kind of sideways at this point. And watermelon seed squeezy, which is an unreliable pattern. Not much I hate in the market, but I hate this pattern because it's unreliable. I don't know, pop up or pop down. You tell me. Got here going down, up. I don't know. It's hard. Like the hard part of this is like which one was the beginning, and then where's the end of it? Did it start? Was this the move that came into it? And this is the, that's the A. This is the B, and then the C is continuation. Which way? I don't know. That's the A, B, C. I don't know. Like it's so A, B, C. You can. It's hard to know where it starts and where it ends. So at this point, more of this until we break out, and then the breakout could be a fake out. Prime example of that. Trying to remember. And this one. This one got down right almost to the end here. See how I did that? And then it popped up, and then it looked like it was going to fake it out, and then it went on to rally. So whatever the start was, this right here, the mouth, that's usually the target when it finally finishes the consolidation, either up or down. So that would be UGA for you. RYLD is not chartable because it's a covered call ETF thing. It's probably going to keep dropping out as RYLD keeps chopping out, but this basically just stays sideways with the covered call. That's what I expect. You have to adjust it for the dividend, and it's just hanging. I picked up some of this back here and sold some of it up here. Still have a little bit of it I'm just hanging on to, and it's just churning sideways, not really doing anything. Not really doing anything. Certainly not like one of the others. This one was actually climbing up until this recent market route. It's been climbing. Kind of hit a ceiling there. And this one, though, not so good. This one's just been churning sideways. XYLD. Whoops, XYLD. That one's been increasing until this market route and took it back a little bit. You have to use the ADJ button down here to see these. I was a buyer of this one back here in October, and recently a seller of my majority of that one, as the market looked like it might be topping out. QYLD. Also a gainer, net gainer. You know, when you put it on the unadjusted, it looks horrible. When you adjust for the dividend, because the dividend is such a large component of this, look, when I say a large component, look right there, 12.5%. That's a large component. All right. So those are kind of special tickers. LOY. Back to the roadmap line. If it can hold here, break back above this 880 area, 1,000, maybe 1,100 on the upside for Lily. NEM already covered. Oh, realty income. This is a caution. That's a 3-wave move. Could top out right here at 66. That's adjusted, non-adjusted, almost the same thing because the dividend is smaller at 5%, not 12%. And slightly adjust the fibs to be actually on the points. And it's still 67. Right there for O. That'd be just a corrective move like this. That's an echo of that move up. Echoed off of that right there. The target right there is 67. And it can stop short of that, or it can bust on through and come on up to 73. But then it might resume the downtrend because it's been kind of in a downtrend for a while. Don't think that was necessarily a reversal point for O. Right there. ALB. Campbell Marble finally hit the target. Went even a little past it. Didn't know what it was going to be, but it finally got there. There's no bottom in place yet, so still could go lower. If we get below that, 36 is the next target down here. Not a buyer yet. Not for me. Mora had a nice correction back to the bottom. So ABC at this point, and it still has support down to 13 right there. It's one of those fake outs because it got the close and then it quickly reversed on everybody. So our support here at 13. Oh, I erased that. That was awesome. 13. And then let's try to erase that. And then if we get further decline in the markets, probably going on down here to 10 right there. So if it can hold here, positive sign, pulls the fib on over here, just slightly lower, break back above this high right here, sets it up for same targets we've had, 38 and 50, whatever, 54, 47, 54, 59. Yeah, same targets we've had. SPXL, SPXS are both leveraged instruments, and we're not doing those. And high right there is the target. Set it up. Just needs to follow through. Right there. COR. FYT. There's literally nothing I can chart on SPXL or SPXS. I mean, I can pull them up, but there's not like this one. There's nothing that's not. There's no pattern here. It's just sideways chop. Tried to break out, right back down. It's not a trending. Things that don't have trends. I'll just show you. SPXL is going to retrace in a bigger manner if the market continues down. It's just the way it is. Like you have to break above here to go up 170. And then SPXS is like bouncing off the roadmap line and potentially going to go down. It doesn't move enough to really do anything. 6, but that's low price stuff. So combining leverage and low price stuff, that's two things that makes it difficult. So ASTS. Remember, these are daily chart analysis. If you're in a trade from some other system, these are just daily chart analysis, and we're at the resistance here. Looks like we come on up to the top at 25. May experience a retrace back down to 8. And TKNG. Breaking down. That's interesting. That low held that 618 right there. 3-point tool. First point, second point, third point, right down in the potential reversal spot. Right there. That can break back up to there. Actually, can go even higher. So we need this to break back above the roadmap line and the 618. 55, 53, 57, 69 right there. Got to break through that resistance. Could buy now, but it could go down to 25. Still a coin flip. It's a coin flip here. It's a knife catch if you buy it now. I mean, you gotta feel strong, my friend, which I wouldn't. Like, this looks like that could be a move complete. And we could get a move back down to here. Might be another big haircut right there. That looks like it could be complete. And we get that. Of course, this could be just an intermediate, and we go higher high. Not high probability at the moment. Not high probability. Kind of like this one. Not high probability at the moment. We could go up, but we also could come way down. Right there. And Google. Sitting here at the roadmap line. Got to break back above the 177 area to get 197,200. And was that the end of the move? This high, this low. That was a 1272. It's the warning. Right back below this breakout. Break back below this over here. We can come down again. And where would that support be? For the retrace, that low, that high. That support is right down here. Back down to 110 area, 115 on Google. NVDA is at the roadmap line. Potential to bounce back up. Break back through here. Continue up here. Or could be more devastating if we turn down here to this area right here. And then that could set up another move to go even further down. Back down to retest that gap up right there. Gap through that zone, gap through that prior breakout high. Could go back and retest that gap. And watch out for that on NVIDIA. There's very little upside compared to potential massive downside. PANW is just sitting sideways on the roadmap line. Higher lows. There, retraced that low, that high. Retraced to the 618. Can we find the support and turn higher? That is the question indeed. Just clicked wrong. That one goes up here. 1, 2, 3. Potential for this to go to extensions up here. 411, 455. And then compared that to that pullback right there. Yeah. Pretty getting a lot of confluence right there for a move to there for PANW if it can break out. It's got to break back through this orange zone where we gap down. Large gap down. Consolidation right in the middle. Got to break through it to get up here. All right, CCJ. Chemical. Oof. Made it down to that one. Next one down, right down here, 27. Watch out for that one. Right there. Coin. It's trying to hold support. Got to break back above the roadmap line to indicate we're going higher. Let's clear these off. Clear that one off. Clear this one off. At this point, got this high. Got that low. Got to break back above this resistance right here. If we can get above that, can rally up back to this zone, possibly the top of the box, possibly breakout. Possibly. Top of that box comes from this high back here. We topped out here, went down, topped out here, and then haven't been back. So those highs kind of dictate the inability to break back above and go higher. And the market is back open. Futures are back to ticking. And but beautiful setup right here. Beautiful setup. It popped up, retraced. Need to see it break on out. It's like a little anomaly up there. Like pop and right back down. Not that beat up for the market here. This has the potential, like a 1-2-1-2 setup, potential to break out. Really need to see this pop out of here though. It's kind of sideways and it's just winding up the spring at this point. If it breaks out, has potential to very quickly move up to the 80s. If it breaks down through support, which is all the way down here at 50s, we can go down here. So there's the long and the short of it. 80 on the upside, 85, and 35 on the downside. That's Bud for you. MGM has the setup to go up, but it might not follow through. MGM returned to the bottom, and the extension down to 30 would be my expectation right down here. Hasn't quite bottomed out yet. CRWD. Hit this support here. Next one here. If we break that one, down here. It's going to have to break back above here to go up. And right now, it doesn't look like we found a bottom yet. I kind of expect it to take one more spill to this target since it poked below it. Could rally up and then come back down. That's what I expect on CRWD. Amazon, I did pull that up briefly. Resistance here, 175, and support down here, 127, 130 area. That's the upside and the downside on Amazon. AMD, blasted down, getting a little reprieve, but still expect this one to come down here and find a bottom somewhere in this zone. Ideally, down to 95 to 115 area. Ideally. Walmart's not hit that bad. Not that bad, he says. Didn't really participate in the market route. This is why I say it's not a crash. Like, everything's not just like wiped out. Still has support down here. And then gap. And the roadmap line. And we could, since we pulled back about the same size as that right there, and a little bit, and about a little bit faster speed, we can do the same results. That can get another leg higher. off there. So 82-ish. Target up here. Sometimes I don't have to draw the fibs. I can just make that. That's an echo in the market. If it holds here, if it doesn't hold here, that's support right there. So there's the long and the short of it right now. And this could break down and go lower. So back down over here. That's Walmart for you in a nutshell. You're welcome. Check it out. And SVXY, there's nothing to talk about there. SVXY is just down and it can go lower. Had a 39% down. It may take it 2-3 months to get back up if volatility is going to chill. It's not a chart that moves with a trend kind of situation. I went through that this morning. If you want to know more about SVXY, go watch the morning video from today, David. I talked about it quite extensively. DHI went all the way back to COVID and talked about SVXY. So DHI just kind of hanging here and may retrace. PayPal is churning. Churning. And not failed to break out. Has failed to break down. So we've got, I got lots of stuff drawn in here, but there's the resistance and there's the support. So everything else, and just draw it in red for you right here. Like this is the resistance and this is the support. As long as we stay in the middle, we're just going to go sideways, just popping, doing more of that. If we get above, up here, we get below, down here. Upside, still got lots of prior highs to break above. It's built a lot of resistance to going higher. So I don't really expect much above 78. And if we break down, probably go to my long-term target down around 42 that I've been looking for years. Years and years. And AVGO, I thought I already did that one. Bounce off the roadmap line right there, above 161, 194. And Roku get routed. Yeah, pretty good. Probably more downside to go. Down here around 43. Right there. Maybe even lower low down here. Roku get routed pretty good. May rally up to the roadmap line again, but it already hit the targets for that last one. So we may rally again, hit the roadmap line somewhere over here. So there's resistance. Can't really draw it, and I don't like that. Just draw it with this tool. Somewhere in that, bounce off of that, go lower. That's Roku for you, MRK. At a potential support, if we break down below it, it's going to be ugly. Gosh, that can return back to here. Why do I go back so far? Because that's what it needed. There's no universal, like, why go back 1 year, 2 year, 3 year? There's no universal to that. That's part of Elliott Wave stuff. It's subjective, very, very subjective. And I can't just teach it in a few minutes. So that's mark for you. Mario already did. BDX. Bravo Delta X-ray is a downtrend and just hanging in the box here. In the box. Tried to break down, tried to break out, and just keeps chugging in the box. I just expect more of that garbage right there. Going nowhere. CAVA, Kava. Came down, hit the roadmap line. Beautiful. Beautiful retrace, finally. So that's breaks it back above 88. Get 103, 107, 120 on the upside. For Kava, BKR. Baker Hughes, support right there at the roadmap line. And if we hit it and bounce off, potential to go to 39, which is the prior all-time high. Which just leads it to, or not even all-time high, just prior major high. So more choppy sideways action there. Just more chop. Yep. More chop in the zone. All right. I wouldn't expect a lot of that one. Not the large potential beautiful upside. SoFi. And potential for that to break down and go lower. Let's get into the danger zone. If we get like it held those low. Poked and moved back up. If we get any kind of move below that, we're coming down here probably to $2 on SoFi. That was a 3-wave up. We don't have the correction complete. It can extend lower. And idiom. I already did that one. FAS is back to the roadmap line. It's leveraged financial. Said it was going to come back here. It did. That high, that low. 127 on the potential upside. And support down here at the 618. And XRP, USD. Nothing. Rejected, breaking above. Oh, that's bad. That's really, really bad. Really not good. So you've got this high, you've got this low, you got that rejection of the trend. Can go right down here. Like that. XRP for you. BA. Dun, 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 dun. Getting close. There's support. Resistance is at the roadmap line. Pretty clear. Resistance, support, break down, going lower, break up, going higher. I do have a long-term up, moving up expectation of this. It was a bullish move completed here. Correction completes on just a little bit lower low. And then we can move on to going up to 600. It's Boeing in a nutshell for you. KDP. That was a beautiful trade, and it finished. Tagged right there. Now nothing. We're in neutral. Tag the target, 35. Support down here. Potential upside, 35. You know, we tag 35, 35.90, 37. These are fuzzy zones on. So technically, this one was hit right there when we hit the purple line, because the purple line is the fuzzy zone for that 1272. So 37 upside potential, but it didn't hold the breakout. So it may be on a path to come all the way back down to here. And that's what we got at the moment for Keurig Dr. Pepper. ORCL, Oracle. Back to the roadmap line. We're almost there. Didn't quite hit it. We break below down here. That's what we got at this point. Got this high. Got that low. Resistance here. Target up there. Resistance right there. Target up here. 149, 152, 160. And if we break below the roadmap line, back down below the gap, potential to come down here. And if there's anything I said like that you liked, if you appreciated me hitting your ticker, give me a thumbs up on the video. Do appreciate it. I'm getting below 70 people, and I usually cut it off below 70 people. So I'll do a few more tickers and we'll wrap this baby up. And that worked out exactly to the targets. Potential to reverse here on Avalanche. And TM Toyota is not quite too as far down as we might go. We're at a potential reversal point. If we break down, watch out for the lower right there. SOL USD holding up really well. That's what I gotta say. Holding up really well, but it's not out of the woods. Not out of the woods. Support all the way down here, but we're holding up really well. Could go on extensions. Is set the long-term target 443.6, possibly 2200. Some ridiculous numbers. Absolutely ridiculous. Absolutely ridiculous. Anyway, NUE. Well, I was expecting that to come on down to 140. And NEE. I'm gonna skip PLTR there. NEE, Nextera, hitting the resistance support down here at 69, and we may. That's a 3-wave move up. This is what's, go back, rewind all the way back to the beginning when I was talking about 3-wave moves up. That's wave 1. There's number 2. Here's number 3. And we stopped at the point. It is extended. It's not an echo of wave 1. That can result in a move lower right down here. This is the scary thing of this chart. All right. DIS. I skipped PLTR. PLTR. And here you go. That potential retrace. Holding right here. We barely closed above that 618. Maybe that was enough to kick us off to 31.32. Maybe if it gets back below that 618 tomorrow, I'd watch out for this down here. It's in the cards. We could potentially retrace. We're squeaking out incremental little highs, and we could get a bigger retrace and kick off a bigger move up. DIS. Bum, 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 bum. Potential reverse here. If we get below that, though, watch out for the extension lower at 73. And TSLA. I talked about this quite extensively this morning. Should go watch that video. Here's support. If that breaks, target down here. If we bounce, up here. We're at support, multiple different ways. Right there. That's got to hold. Resistance right there. Resistance right there. Resistance right there. All those prior highs. And the roadmap line. And looks like I got to the end. Thanks for coming, everybody. I'll be back live 9:15 in the morning Eastern time before the market opens. Same bat time, same bat channel as always. We will be back with you and go through what's moving in the market. I'll check out whatever might be moving pre-market, make a list, and come and talk to you about the potential opportunities. Have a great evening, everybody. We'll see you again tomorrow morning.